Hey, what's up guys? Houston here. Look, are you trying to figure out how do I get a loan with just my EIN number? Okay, if that's you, then I have 10 lenders that you may want to check out to see if they'll give you a loan with just your EIN number. Now, please understand, because they may say, hey, we need your social on the application. What they're doing a verification of your identity when they ask for your social. So they're not going to put a hard pull on your credit file. Okay, you need to understand that. But with a lot of these lenders, they're looking basically at the business and stuff where you don't have to worry about your social and everything. They're focusing mainly on the EIN number because they're looking at revenue based. All right, now the first lender is Stripe Capital. Now with Stripe Capital, you do have to have a Stripe account. Now the interesting thing about it, you only have to be in business at least 6 months. Revenue, you have to show at least you made at least $5,000 a year in revenue transacted through Stripe Capital, okay, through their payment processing center, okay, and you have to be in good standing with them. All right, so that's number one. Then the next lender is Shield Funding. Now with Shield Funding, it's strictly all about the EIN, what the business is doing. Now they want you to have at least $8,000 of revenue, okay, so that may be monthly, but you can be a business at least 2 years. Now that $8,000 in revenue, they may be flexible on that because every month may not be a $8,000 revenue month. You may have some months where you may do 10,000 or above, but they're looking for people to work with that at least has 8,000 in revenue, okay, for at least 2 months or more. Now the next one is Camino Finance platform. Now with the Camino Finance platform, again, one of those platforms, they search out the loans and stuff for you, but you have to be in business for at least 1 year. They're stating that you have to have at least $8,500 monthly, no bankruptcies, business bank account, 550 credit score. Again, 550 credit score, that mainly they're looking to see if you possibly file bankruptcy or are you the person that actually own the company, okay? And it is a soft pull, so you don't have to worry about the hard inquiry. All right, then the next lender is Fund Through. Now with Fund Through, their loans go from 500 up to 10 million. One of the things about it that's interesting about it, like I said, with a lot of these lenders, they don't want you to have a recent bankruptcy. Okay, so if you had a recent bankruptcy, one of the things that you can do is if you know that you have real challenging credit or whatever, or recent bankruptcy, what you can do, you can go with your go to your Secretary of State and do an amendment and add somebody on that has not had a recent bankruptcy, and they can apply for the loan for you as well. But the main reason for them checking the credit anyway is to see exactly, are you the person that actually owns the company, just for identifying purposes. So just keep that in mind. The next one is Shopify. Now with Shopify, of course, it's e-commerce platform type of situation where Shopify Capital, they do charge a 10% fee on the loan. So if you borrow $15,000, they charge you 10%, which is $1,500. Okay, but you have to be a US based company, a UK company, or a Canada company, but it has nothing to do with your credit. It's all about the transactional revenue of the business. All right, now this next lender is Lifund. Now with Lifund, their loans go anywhere from 500 up to $250,000. Now here's the interesting thing about Lifund. They are a CDFI. That's a Community Development Financial Institute. Okay, so that means that they focus on the challenges trying to get loans and stuff like that, where they're actually trying to work with you to see what they can do in terms of funding and things of that nature. All right, now you have to be in business at least 6 months in order to deal with Lifund. Okay, now the next one, here's DreamSpring. Now with DreamSpring, again, a 600 credit score is with them. But the good thing about it with DreamSpring, almost like a Community Development Financial Institute, they're really focused on working with small business owner, minority business owners and stuff like that. Because here's the thing about it, like with your major banks and stuff, they have their criterias, and some of their biggest criterias is your debt to income ratio. So when you're trying to go to a bank and you're trying to get a loan, one is the red tape. So with if you have not been in business, excuse me, for at least 18 months to 24 months, a lot of banks don't want to deal with you, okay, for as a loan. Now, a line of credit with some banks like Wells Fargo, with a line of credit, sometimes right off the bat, or they may give you a business credit card and a line of credit, or they may want you to wait at least 6 months to get a business line of credit. This is the reason I tell people, don't go after business loans with the major banks. Go after the business lines of credit. Even with PNC. With PNC Bank, they will give you a business credit card as well as a business line of credit. Okay? So those are the financial institutions. But again, with the banks, you have to keep in mind the DTI, the debt to income ratio with the banks, is usually anywhere from 50 to 55%. So if you get turned down and you have a higher debt to income ratio, that's probably why. So these other type of companies, alternative lenders and stuff, they're not looking at your debt to income ratio. They're not looking at the credit and stuff like that. They're mainly focused on the business generating revenue. So that's the reason that these other financial institutions are in place. Now, after DreamSpring, you have Capital One Tap. Now, with Capital One Tap, they want you to be in a business at least 6 months, okay? And revenue is about $2,500. But I always tell people with Capital One Tap, maximum about $30,000, being in business at least a year, all right? But just to keep it simplified, 6 months, revenue at least, monthly revenue at least $2,500. Now, here's the thing about it. You can't go to Capital One Tap with a DBA. All right, you have to have a LLC, a S Corp, corporation, okay? They don't deal with DBAs, doing business as, all right? And so that's the unfortunate thing, that a lot of people miss the opportunity because they're operating as DBAs and they're trying to get funding. And a lot of lenders, they look at you not being structured and stuff, and so they're like, they may pass on you, all right? Now, the next one is Divvy. Now, with Divvy, they pull Experian, soft pull. But the good thing about Divvy, they also report to the business credit bureaus. So by them reporting to the business credit bureaus, what they're doing is helping you build up your business credit. Now, one of the bigger things that I always tell you guys in terms of how to build up your business bank rating so that you can get access to more funding, I always tell you, you need to have one of the major banks. So in terms of one of the major banks, I always choose the top 3, but there are more. The top 3 would be Citibank, which reports to Experian Business, Equifax Business, Small Business Financial Exchanges, shared with Dun & Bradstreet. Then you have Chase Bank. Chase Bank is Experian Business, Equifax Business, Small Business Exchange, shared with Dun & Bradstreet. Then you have Capital One. Capital One is Experian, Dun & Bradstreet, Equifax, Small Business Financial Exchange, okay? And the reason that, like, those are the top, because they report to more business credit bureaus, as I continue to tell you guys. And building a relationship, one of the biggest ways and the fastest ways for you to build up your business bank rating, which is more important than a DUNS number, is making your either daily or weekly deposits. Okay. Now, you also have PayPal Capital. Now, with PayPal Working Capital, the thing about it with PayPal Working Capital, you can do it, but and it's not focused on the EIN, but you have to have either a premium account if you having at least $20,000 annually in revenue, or you have to have a business account and it's $15,000 annually. Okay. Now, if you have questions about business credit funding, personal credit funding, click the link in the description. Schedule a one-on-one consultation. Thank you.